Morning, my name's Carol Harmer from the International Trading Institute. I'm going to show you today about a pattern. Um, we have many patterns that show ends of trends and they're a reversal. This one I'm going to show you is a reversal pattern, and what happens is once the market has turned, you can see straight away that the market will continue lower. So I've been trawling through some charts and I have found patterns, but I'm going to show you this one because it's not rare. It's not a rare pattern, but it's not one that you see a lot that follows through. So if I just go on to the dollar CAD chart, you'll be able to see exactly what I mean. Now you can see that dollar CAD had been going up all the way up. Now here we had what we call a key reversal day. Now what happens on a key reversal day is that you get a higher high, a lower low, and a close below the low or close of the day previously. So there you had it. You had a big move up. Move couldn't be sustained, and down we go. I mean, I know it was the 4th of February, but it's still quite prevalent. Now, obviously when you put your Fibonacci levels on, and I can do that right now for you. So what I'm going to do is I'm going to take this point here and put it all the way up to this point here. And what you can see on the daily chart is that we broke through the 61.8 Fibonacci. Now that in itself is quite important. So this was your move on this key reversal day, where any trader who had any long positions very quickly got out of them. And you can see where they get out, because if the market then went below this point here, you would see there's sellers up here, but you would see all the traders get out of any long positions. So not only did we have a key reversal day, we also had this sort of topping head and shoulder pattern. So if I move this up a bit, you can see what I mean. Now with patterns like this, what you need to do is you're drawing in a trend line. So you've got two patterns within one market that is showing you that it doesn't want to go up anymore. So I will draw that to that one there. So all in all, you had a bit of a mess here. However, what happened when the market recovered was that it couldn't break these highs here. So it double topped. Now double top can be a continuation pattern as well. So down we've come, we've held onto some support around these levels here, but we've double topped here. And I think the traders, obviously, they're looking at what else is going on in the dollar, other currencies, and you really wouldn't wait until this point. You just wouldn't. You just draw that line in just so it's for your benefit, really. The market then, after it did all this bit of a mess here, couldn't break any higher. And there's a saying in trading is, what can't go up has to go down. And that is very true to any market that you're looking at. You can also see that on the way down, all this little glut of moving averages, the market broke below those. Now, as I've said to you before, with moving averages, I don't look at the crossovers. I put the ones that I think are important on the chart, and it just gives you a support and resistance levels. And on this one, it would have offered you support levels. Okay, so when it broke again, you had a glut of selling. One of the most important moving averages for directional trading is the 200-day moving average, and that came in at 140. So they have round figuritis as well. That's another thing that happens in the forex market. You do get this round figuritis, and what that means is that the market, if it goes down or up, if it's got a big figure like 140, you should find that the market will aim for that. Markets love big figuritis. So that's what happens, is that markets look to these longer term levels. Although you can obviously trade within the market, you can trade within it going down or sideways or whatever, you have to be aware of the big levels that the market breaks, because you're then looking at hedge funds and pension funds and all the funds coming in, AUMs, and they are looking at this figure as well. So just be what you need to do is just be aware of where they are at all times and trade accordingly. You can trade small, but you can trade within a pattern. So it's quite easily done that. So this key reversal day within this broad head and shoulder top, what you do, how you get targets, is you measure the distance from the top of the head to the neckline. When the neckline breaks, the target should be this distance here. If we just eyeball that, it takes you down towards 136.5, round about there. So we're not far off. Obviously you've got the 78.6 fib coming in at 137.25. Market is oversold, keep your eyes on that, but the momentum indicator is still pointing lower. So to ease the oversold situation, what you could do is see sideways trading back towards the neckline, back towards the 200-day moving average, back towards the 9-day moving average and the 18-day moving average. So you've got all this here that's going to act as resistance. You've also got this trend line that I would extend out, and as time passes, that trend line will get closer to that 200-day moving average. You will find at that point the market comes off its oversold conditions, and what it does, it will go back to either neutral or it will look overbought, which it wouldn't be. So in the sideways markets, you do get this. When it goes up, if it stays below the 200-day moving average, you can expect a big move lower in dollar CAD, which, you know, is not unusual with the dollar doing what it's doing. It's not unusual that is the direction that the market will go, and it will go for these bigger levels underneath. I think that's all I can say really about that particular pattern on the dollar CAD. What we're going to do is, obviously, these charts are for educational use only, but you've got to be able to look at these patterns, identify the patterns, and then combine it with other indicators. What the market's doing. Is it a high volume day? Is it a low volume day? That sort of thing. If you can do that, great. There are trading rules, obviously, and as long as you stay within these guidelines, you know, you should be able to make some good money out of these patterns, as long as everything else sort of comes together. And I think that once you can identify patterns, they're going to be the first indication that the market is going in a different way. There's all sorts of patterns, far too many to go into on this video, but there's loads of patterns and they do work. But what I'll do is I'll go through them with you, but obviously when we start our course in September, I will be doing quite a bit of work with you on pattern recognition, indicator, volume, open interest, psychology. I'm going to be going through all that, and there's a lot to learn. There really is a lot to learn. But it just gives you that one step ahead of the retail market, and that's what we aim to do. We're going to get you up to a professional trader standard. And once you learn the guidelines and the rules that we apply, you will find that your trading is much more productive, because you're not rushing around trying to trade short term. What you're doing is you're actually waiting for levels, waiting for patterns. And it doesn't matter, you know, they can take a week to form. It really doesn't matter. But as long as you can identify that that pattern is forming, then that will give you the edge. And all traders want is the edge. We're all looking for the edge, you know. And we do find it. We find it in the charts. Anyway, I hope you found this video helpful with the two patterns within the one chart. As I said, this is for educational purposes only. And if you want to see any more videos, please go to the International Trading Institute website, where all these videos are uploaded, as well as other things. And it tells you exactly what we're trying to do, what we're trying to achieve with the retail market, to get them up to, you know, so they're not blowing up their account every week. That's our aim. So if you'd like to go to our channel, which is again the International Trading Institute, subscribe and like, and that means that you will have access to all the videos that we put up there between now and when we go live. Well, have a good day, have a great weekend, and obviously it's Friday. Interbank closes at midday on a Friday, so all they do is client orders, and I have to tell you that they don't like that, you know, because they shut at 12. And so if you do client orders, you know everybody's the same way round. So you don't, and this is a major figure out of the US, you don't really do a lot on a Friday, okay, on the interbank side. Okay guys, have a lovely weekend, and I will catch you Monday.